Good day, ladies and gentlemen, and welcome to the show this Sunday, the 19th of September 2021. Yeah, Houston, we got a problem. Actually, three problems, massive problems. One is created, one of the big problems is created by the Federal Reserve and the U.S. Treasury. They've cut all stimulus off to America. The COVID crisis did massive amounts of damage to businesses in the United States of America. Not so much the big corporations, but the businesses everywhere. You know, in your community, you probably know 2, 3, 4, 5, 6, 10 that's failed. Now, just because they had to go through this long duration of lockdowns and everything else, you know, that just they couldn't manage to keep their head above water. So you see an awful lot of buildings with signs on them that says closed for lease, you know. But that's not it. That's not all of it. Is this cutting back of people's unemployment? They're not getting their unemployment checks anymore. They're not getting their stimmy checks anymore. All of a sudden, how much goods and commercial activity can go on with them buying things from China? It's going to slow down tremendously. Now, how did the Chinese get all that money that they had to invest in the real estate market in China? Because that's where an awful lot of investment has went, into Chinese real estate. You know how much cement they used, China, to build all those big high-rise buildings and everything? And after the 2008 financial crisis, what enormous building projects went on in China. It was absolutely unbelievable. And so an awful lot of that money came from selling goods. The biggest trading partner China has is the United States. They ship the goods over here, and we pay dollars to China. And this is what's brought China up from, it's made massive investment. This is where they're getting their money, guys. All of a sudden over here in the West now, because of the damage that COVID did to our economy, our general economy, not Wall Street, but our general economy, and the cutting off of fiscal stimulus, been completely 100% pretty much cut off. Fiscal stimulus. Fiscal stimulus is when you get your stimmy check in the mail. That's what fiscal stimulus is. An awful lot of people out here in America now are just don't have the money. Their wallets are empty. How are they going to buy goods off of Amazon if their wallets are empty? And suddenly, you've got so many people out there that are not buying it, and the economy's starting to slow down, that the people that do have money, they're sensing that something's going on. And they're putting off their purchases right now. They're trying to hold back as much as they can and not buy quite as much as they were. And that's the effect that's going to start to come right now because of what they see happening. They're in touch. A lot of them are in touch with what's going on out there right now, and they're frightened. They're frightened there's going to be a major deflation in the economy. In fact, deflation is coming. So that's one of the big problems is a slowdown in purchasing of Chinese-made goods by America right now. It's happening right now. It's going to be massive. That's going to impact China, tremendously impact China. But if that's not all, China's got a major systemic problem within their real estate market right now, and it's called Evergrande. One of the biggest developers in China. They're sinking. And, of course, they have over 1.5 million, I think it's 1.7 million, just let that sink in for a minute, properties that are under construction and stuff for the Chinese people, and projects that, a lot of that, they're going to sell some of them at fire sale prices. What's that going to do to real estate prices? The real estate bubble in China right now is starting to pop. And that's where the Chinese people have put an awful lot of their investment money, has went into real estate. Basically, what I'm trying to tell you guys is this first problem, the problem is that America is not going to be purchasing as much Chinese goods, is going to impact the second problem, which is Evergrande, to create a major slowdown. And I mean, we're talking a 2008 event for China, like what happened to the United States with the real estate burst that happened in 2008. That's why this is being known as a Lehman moment right now. So those two problems are meshing together, and they're going to start to translate or spill over and have collateral damage into the world economy. So it's going to create a deflation. But if that's not all, we're going to talk about the third problem. So there's problem 1 and 2. I've covered it for you guys. Problem 3 is overlapping on top of the first two problems. And this is the U.S. debt ceiling. Now, the Federal Reserve have decided that they're going to make, and they've already made, contingency plans if the debt ceiling is not raised. You have to understand something. They're making contingency plans. You guys should be making contingency plans. You should be thinking what will happen if these first two problems in China, and we get a major slowdown in China, which will impact the entire world economy and push us toward deflation, and the debt ceiling doesn't get raised in time. What would be the net effect? If the debt ceiling is not raised in time, considering the problems that are already happening in China right now in real time, it's very likely that the system could go into, the whole world system could go into a massive deflation if the United States debt ceiling is not raised in time. And it would be fast. A very rapid deflation of the entire system. And it would be very fast. The Fed and the central banks, all the central banks, are not prepared for this. Not at all. They're prepared to tighten monetary policy. Right now, that's what they're prepared for. That's what they're preparing for. They don't see this coming like a sledgehammer if all three of these problems manifest themselves. But what we're going to talk about is what would happen for you guys out there. What do you need to prepare for, and what would happen, and what would it look like if all three of these problems manifest itself in a worst case scenario? And they don't raise the debt ceiling. Evergrande in China goes down. The economy starts to sink at the same time, spillover effect into the banking system and stuff. You know, there's over 100 banks that Evergrande owes money to, and a lot of these banks can't afford to take a major hit. Banks are all interlaced together now through derivative chains and stuff like that. We're dealing with an extremely over-leveraged system. Now, you see, we have a lot of deflationists out there, and they're talking the talk, and they're saying, well, the world's going to go into a major, prolonged deflation, and it's going to last for a long time. I'm going to explain to you guys that can't happen. And there's one, my explanation is going to be so simple, and it's only going to take me a second to explain it to you guys, is the system right now is so over-leveraged that for every dollar out there, now first off, you have to understand that all of what you call dollars, when you go to the bank and stuff, that's all just a digital ledger. That's all it is. It's like Bitcoin is a digital ledger, but the Bitcoin ledger is solved by a computer. The computer solves it and keeps it up to date. This is a ledger too. That's all it is. It's like Bitcoin. Your dollars in the bank are like Bitcoin. They're just digits on a screen. Unlike Bitcoin, what happens is this is a manually operated ledger. of dollars. But there's a pool of dollars that exists in the system. That's all the dollars that exists in the system. It's like a pool. Picture it like a swimming pool. What the over leverage is they've created so much debt now. And debt, the other side of debt is credit. All those dollars that are in that pool, all of them have been created from credit. In fact, more than all of them. The credit in debt is much, much, much larger than the pool of dollars that they use for the ledger. If you guys can understand what I'm saying. And so if the system deleverages, everybody wants their money now. They see the system deleveraging. In other words, the system is deflating, and they all want to be paid what debt they're owed. So what happens is there's more outstanding debt and credit than there is bills in the system that they're keep moving around on this ledger. The ledger would basically disappear. All the digital dollars, if the deflation is allowed to continue to its final conclusion, all of those digital dollars would disappear. All of them. Because the outstanding credit's much larger than the amount of digital currency that's out there. And so then at that point, the only dollars that would be real would be the ones you can hold in your hand. Cash. That's all that would be left. What would happen is the system would freeze. So if we get a major deflation and it moves really fast through the system, it's going to cause what's called a meltdown. Okay? Now what a meltdown is basically is, and this is what they couldn't allow happen in 2008. They damn well can't allow it to happen now because it's 4 times bigger. The problem's 4 times bigger. But it might happen. If the U.S. government doesn't raise that debt ceiling and China starts to sink, in other words, all 3 of these problems become manifest that I told you guys about. The system might deflate so fast and destabilize because it moves it electronically. The system works now electronically. It could destabilize so fast that we could have a meltdown of the financial system. And I figure by my calculations that somewhere around 40%, the system falls about 40%, somewhere around that area. All credit would freeze. The system would lock up because there wouldn't be enough digital dollars for that ledger to function. That's the oil. That's the grease that runs the machine, is the digital dollars that are created on that ledger through credit. So the credit starts to dry up, and it dries up to the point where there's no digital dollars left out there to push around in the system. In other words, all the money in your bank account, all the money in your savings, all the money in your everywhere, it's just gone. Because all it was credit. And now the credit has demanded payment, and it's gone. And the system locks up. So that's what could happen if the United States government doesn't raise that debt ceiling. And now they're making contingency plans. The Fed's made contingency plans that might happen. And then we got the China thing going on. So, I mean, all 3 of these problems are huge. But let's just, first what we're going to do is we're going to talk about if the United States doesn't raise the debt ceiling and we go through a credit freeze and we go through a freeze in the system. What would happen and what would it look like? And then we'll talk about what if it doesn't happen. Okay? So the first thing is we're going to talk about is what's it going to look like if the system locks up? Well, it's just like it says, just like I'm saying. No credit for everyone. In other words, your debit card won't work. Your credit card won't work. Your bank account won't work. The doors will be locked on the bank. And if you try to go to your online banking site, it'll just basically won't allow you into your account, or if it does allow you into your account, it won't allow you to move the money anywhere. It's just a freeze. Everything's frozen. Money-wise, is frozen. Companies out there wouldn't be able to make pay. Truck drivers wouldn't get paid. They wouldn't be able to buy fuel. The trucks would all stop on the freeways. This is what it looked like. You wouldn't be able to buy anything unless you've got cash. Okay, this is what it's going to look like. So how long would it last? Well, what it's going to generate is, within the upper echelons of the financial system, the Fed, all the Fed members, all of the central banks, this would be a worldwide phenomenon. The whole system and the whole world would be frozen. Okay? And so what they would have to do is they would be a tremendous amount of fear that would enter into the hearts of all of the people in charge of the system. Fear like they've never felt before. And they would realize that we've just entered into a crisis unparalleled in human history, where the whole world's financial system is locked, frozen, won't work. That's what deflation would do. Because all the money's created from credit. And if it deflates, it's all gone. There's no money. How do we function? We don't function until they get it fixed. And they would realize that, hey, you know what? We got to fix this. It's no choice. We've all got to put their heads together and figure out something to fix this. Now, they would have a period of time to do that. And yes, of course, it would be in all the newspapers and everything, you know, and there'd be a lot of doomsdayers out there think the world is ending, and some people would start to raise Cain. But most of the people would be awaiting further news or whatever. They would be staying at home and they're watching the news to follow the story and find out what's going to happen. And they would be waiting patiently to see what's going to happen, while the world leaders would all be having emergency meetings. And what you would have is you'd have a certain percentage of the population, a very small minority, that would start raising Cain. Now, a warning for those ones that's raising Cain, because I believe truly that they would come up with something. They will come up with some sort of idea. They'll reboot the system, and the system will start again. So a warning for the people out there that would raise Cain in a situation like this is, when the system comes back online, they're going to come after you if you've raised Cain, and you're going to be prosecuted. It's as simple as that. Because the system will come back online. They will fix it because they have to fix it. There's no choice. And it would be a panic situation. So they would be pushed like normally. You know how government functions normally? Normally it takes them weeks and months to do something, anything. Well, in this kind of situation, they would do things and they would do it fast. So the system probably wouldn't be down that long. Probably no more than a week or two. But the restructuring that they would have to do, we would be entering into a whole new system, a whole new way of doing things. I don't know exactly what they would do to fix it, but it would be major changes. Major changes to the system. So it wouldn't represent the world that you knew, monetarily speaking. There would be such big changes made monetarily during that period in time. It would be a total reset of the entire system. Now, I'm not going to guess what they would do, because they would probably bring in their top experts. That day, they would call them in. They would go pick them up with a limousine, bring in their top experts, and all have a big giant meeting, and there'd probably be hollering and yelling and everything in the meeting, and pounding their fists on tables and everything, because they'd be scared. But they would get it solved. They would come up with some sort of a plan or solution. And it might be such a strange twist what they come up with, because I don't know what they'd come up with, but whatever they come up with would be such a strange twist. Some people out there would lose everything. And other people out there would become rich overnight, where they didn't have money before, because of the strange twist. It might involve gold. Maybe they would reprice gold. Just don't know. I'm just speculating right now. Maybe they would release some sort of a cryptographic new currency or something. Gosh knows what they would do, but they'd have to do it fast, and they would. Then the system would come back online. The system, probably the new system, would probably be better than the old system. Because it would be, they would make repairs just in like a week or two's period that the system would be down. And then the system would come back online again. And I would feel pity for all of those people out there who tried to take advantage of this by doing whatever, say doing unrestrained acts of violence or whatever. I would feel pity for them, because when the system comes back online, they'd probably have all of those people. There's an old saying, guts for garters. Anyway, listen, guys. So what would it look like now if that doesn't happen? Say the Fed and the central bank decides to raise the debt ceiling, and they come to some sort of an agreement on time before the system melts, which is actually more likely to happen. What would that look like? Well, I'll tell you, China's still going down. That still wouldn't solve Evergrande problem, which is a massive problem, and we would still go into a deflation. We're still entering into a deflation. So even if they raise the debt ceiling, we're still entering into a deflation, but it wouldn't be the magnitude of a problem that might freeze the system. I don't really see it freezing the system right away. I just see a slow decline in the markets then, if they raise the debt ceiling. I see a slow decline in the markets that would get deeper and deeper to a certain point where they would have to do something again, to offset and it might not be as big a changes that they would make, but it would still be very problematic, and it would probably affect the price of gold and silver to the upside after they make these changes. So either way, we're heading into some very turbulent times. Keep your eye on that debt ceiling, because it's not 100% guaranteed that they're going to be able to raise it. And if that debt ceiling does trigger and they don't raise it in time, it's going to cause major chaos and panic within the whole world. That would be an enormous trigger. But even if they do raise the debt ceiling, we're still headed toward problems. Big problems, systemic problems with China that are going to spread through the system because of the first two problems I told you about. So even if we eliminate the third problem, which is the debt ceiling, still we're going to see China go down a lot, because people are not buying their goods around the world, because the stimulus has been cut off all around the world. Now they're wanting the system to function on its own, to not function under fiscal stimulus, and they're even planning on cutting monetary policy back. Well, this system's dead. It can't function on its own. It's addicted to stimulus. It needs it. So we're going to deflate. They're only going to let the deflation go so far before they start up the money printers again. They start the monetary stimulus again. And they start up fiscal stimulus again. But the fiscal will be in a different form. It'd probably be UBI. And that would be a big one. Among other things that they might do. And so that would move us toward inflation. And that would be very bullish for gold and silver and cryptocurrencies, all three. So there's where we're at. I'm just like you guys. I'm sitting back here watching to see exactly what happens. And I'm going to tell you guys, this is the most interesting game in town. Like if it was a football game, it would be a knuckle biter. It would be the most interesting football game you've ever seen in your life. If this was a football, but it's not. It's a financial system. And this is the most interesting. I want to tell you, I never know what's going to happen from day to day within this thing. Gold and silver prices going down today, and then they're going up tomorrow, and everything's just gone haywire and chaos. But even though it's crazy, it's extremely interesting. And so I'm covering probably the most interesting story out there. Is this ever unfolding financial drama? It's drama. Thank you guys for listening. Have a great rest of the weekend. We'll catch you guys on Monday morning. Bye-bye.